Hey everyone, in this video, I'm going to highlight my top dividend stock to buy for passive income investors. Interestingly, my top dividend stock to buy is the one that has one of the highest profit margins of any of the companies that I follow. Now, if you've been following my channel for some time, that might be a clue as to which stock that is. So without further ado, join me, follow along. Let me share with you what my top dividend stock to buy is, why I like it so much, and what the company did in its latest quarterly earnings report.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, my top dividend stock to buy right now is Visa. In fact, Visa has been my top dividend stock to buy all year long. The company started out 2024 as my top dividend stock to buy, and it is still my top dividend stock to buy. In its most latest quarterly update in the quarter which ended December 31st, Visa did a solid job increasing its revenue to 8.6 billion. That was up from 7.9 billion in the same quarter the prior year. That increase in revenue led to a jump in operating income to 5.954 billion, up from 5.09 billion in the same quarter the prior year. I'm going to show you that Visa was already a strongly profitable company, and that only continued in this quarter. But before I do that, let me share with you how Visa has performed so far this year compared to a broader dividend stock index. Okay, so if you had bought Visa stock to start the year, you will have returned a total return of 4.91%. That's despite the fact that dividend stocks so far in 2024 have not had a good year. If you had purchased the broad S&P Dividend ETF SDY, you would be down 0.4%. So by picking my top dividend stock to buy, you will have significantly outperformed the broader dividend ETF. Now, this has been true with many of my recommendations so far this year. If you look at my top 10 growth stocks to buy this year, my top 24 stocks to buy, and my top stock to buy, they've all outperformed their broad market ETFs, their broad market indexes. So far this year, my outperformance has been excellent. That being said, I've also cautioned investors not to expect this kind of outperformance for the rest of the year or longer term. This type of outperformance of this magnitude, it's unrealistic to expect this to continue, right? If I was to deliver these kinds of returns consistently for the long term, I would be in a better paying job managing billions of dollars of investment assets, right? I wouldn't be on YouTube. So that being said, so far this year, the returns have been excellent. And I've been saying that throughout my videos that are measuring the performance so far this year. And I have been cautioning investors not to expect this kind of performance to continue. Still, I'm happy I've delivered this kind of return. I'm happy for the investors that have followed along my picks and made some money for themselves and their families. So that being said, Visa is still one of my top, in fact, the top dividend stock to buy, even though it's outperformed the index already this year. I mentioned that Visa's a remarkably profitable company, but its revenue has also been growing nicely as well, from a little over 12 billion in 2015 all the way up to 33 billion in the most recent update. Additionally, Visa's operating profit margin of 67.34% is the highest of any company that I follow, and that profit margin has been growing over the last decade from a little under 63% in 2015 up to 67% in the most recent update. Now, these are phenomenal profit margins, and Visa's business model is remarkably lucrative. The company runs a platform that brings together merchants and customers that use its credit card or debit card with the Visa label on it, and it earns revenue every time someone uses a Visa debit or credit card to make a transaction. That being said, it is attractive to both sides of the equation because Merchants, they want to accept Visa because there's over 4 billion Visa cards in people's wallets today. And then people want Visa cards because merchants accept Visa card for transactions. And so over decades, it's built this network that's now given it a strong competitive advantage itself and MasterCard. MasterCard is another one of my favorite dividend stocks to buy. They've done an excellent job building this lucrative business, and they're generating strong profits for themselves and for investors. I actually own Visa and MasterCard. I own both of these stocks, and I have owned them for some time. They are two of my favorite stocks in my portfolio. And you can see earnings per share over the last decade growing from a little over $2 per share to over $8.55 per share. Earnings per share is what drives dividend growth. Now, you might say, well, Visa only gives you a dividend yield of 0.68%, and that's nothing to run home and tell mom about, but that is only going to increase over the next few years as long as Visa's earnings per share continues growing the way it's been growing. Dividends are paid out of earnings. The more earnings grow, the more dividends have a chance to grow because that leaves more capital for management, and Visa is not a business that requires significant capital to grow the business. And so that's more capital that management can return as dividends. Now, management has been choosing to return some of those cash flows as share buybacks instead of dividends. Still, as an investor, you benefit from that just the same. Instead of getting a dividend payment when management buys back stock, it has the impact of increasing the stock price. And so you still benefit from that in a different way, not in a dividend return way, but it's still profitable to dividend stock investors, to be sure. And even though this is a remarkable business, excellent profit margins, great competitive advantage, revenue growth demonstrated over the last decade, it's trading at a reasonable valuation at a forward price to earnings of 24.4. I would be willing to pay a price to earnings, a forward price to earnings of up north of 30, 31, 32 for a stock of this caliber, but I'm able to buy it at a price to earnings forward of 24.47, which I view as a bargain, and that's why I recommend Visa as my top dividend stock to buy for 2024. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.